Can an annuity help you pay for long-term care? People approaching retirement are usually very conscientious about planning ahead for the next stage of their lives. However, few remember to factor in the cost of long-term care, if they should need it. Many will. Statistics indicate that 2 in 3 senior citizens will become physically or cognitively impaired in their lifetime and will be unable to look after themselves. They will need the variety of medical and non-medical services that constitute long-term care. Currently, they can't count on Medi-care. Many believe that it includes coverage for long-term care, but it actually only covers about 3 months of nursing home care, immediately following a hospitalization, and copays may apply. Medicaid, on the other hand, will cover some long-term care costs, but to be eligible, you have to exhaust virtually all of your personal resources. Although the amount of assets you're allowed to keep differs from state to state, in general, you may have no more than $2,000 in countable assets. So if you can't count on Medicare, or Medicaid, and don't have long-term care insurance, you may want to consider an annuity. The United Seniors Health Cooperative recommends that you plan for 4 years in a nursing home. The cost of this care ranges from $50,000 to $95,000 a year, including room, board and medication. Therefore, you would want to set aside $200,000 to $380,000, plus allowances for inflation. How do you do that? If, for example, you have $950,000 saved for retirement, you could use some of this to purchase an annuity that would begin paying out at a predetermined time. The good news is, if you don't require long-term care, it's extra money in your pocket. Meanwhile, the remainder of your $950,000 is still invested and continues to grow. Annuities can be complicated investment vehicles, so ensure you consult a financial professional before buying. Thanks for listening. Find more tips and training on our YouTube channel at bettergrouprealestate.com.